Let's touch on the fact that the January turnover figures have been released, and we've actually seen a 2-year slump when it comes to what we saw in the month of January. We saw quite a big dip in December. Can we actually put this down to the fact that we actually see a holiday period followed by a very slow start to the year? Or do you think that we could actually see a bit of worry when it comes to turnover and overall volumes for the NSE going forward?
I think if you're looking at this January specifically, we had quite a number of mixed factors, and especially high interest rates and quite a bit of uncertainty on the part of institutional investors in terms of the outlook. And that's really weighed down in terms of volumes. But we are starting to see things turning around. So if you're looking at February, we've started off reasonably well. And essentially that's around speculative position taking ahead of results. So essentially with the earnings season coming up, we're seeing quite a bit of interest now from institutions.
Also interesting, I mean, when you look at the outflows by foreign investors, when you look over the 6-month period to the end of last year, we actually saw inflows coming through much higher than what we saw outflows of around 812 million shillings. Given the fact that you're talking about the speculative scenario that is playing out ahead of those results, do you think that it is likely we'll still see net inflows into 2012?
Actually, if you look at the 6 months to December last year, the most severe outflow was in the third quarter, and really that was really the most severe period when we saw the NSE index coming off almost 16%. For the rest of the period, it was largely matched. Increasingly now we are seeing a lot of the trades also being done between foreign investors, especially along the large caps. So if we look at Safaricom, Equity Bank, we're seeing foreign investors on both sides of the trade, and essentially that's also driving quite a bit of volume. So we're not seeing too much in terms of volatility.
Let's touch on the agricultural sector now, and delving into Williamson Tea, that coming out with a special dividend today of around 50 shillings per share for the year ending March this year. This is of course very positive news, and it seems that another stock that Williamson Tea owns around 40% of, Captoria Tea, gaining significant ground, in fact at the top of the NSE into today's session. Yeah,
certainly. If you look at the 50 shillings dividend, that translates to about a 20% dividend yield. So we're not really sure what price jump we're going to see in tomorrow's session for Williamson Tea, because we think it's really a very good reflection. The sector in general has not been very active in paying dividends, but what we are seeing for Williamson Tea, they sold a significant asset during the year. So we think that 50 shilling could be one-off, and not something that investors can count on, for coming years. We saw investors also looking at Captoria Tea because as an associate company, if you look at the trend in earnings, those two companies are trading at PE multiples of around three times. Yeah. And going at the dividend declared by Williamson Tea, investors have started to think maybe Captoria might also declare an also encouraging dividend level. So we saw the counter edging up about 9%. So
Eric, in other words, investors that still want to take, well, of course, advantage of the fact that there's going to be such a high dividend paid out by Williamson Tea, they still can start participating in the stock. Would you advise that at this point? And when do we expect the company to go ex-div?
Well, so now I think it's still a good buy. I mean, if you look at the sector in general, we still expect good performance from the sector. And just because the sector generally has come off so significantly, I mean, PE multiples of 3 compared to the market of around 7-8 times. Forward earnings. So the sector generally trades at almost half the sector. So if you're looking at Williamson Tea, you're definitely looking at being able to buy into it without significant erosion.
As you mentioned earlier, we're talking of quite a few earnings expected going forward. I know the big ones that you're looking at BAT, Barclays, and also East African breweries are set to come out relatively soon. Are we positive ahead of those earnings, given the fact that, as you also were talking of earlier, that we're starting to see a little bit more foreign participation coming through into the market in anticipation of some really good numbers?
Yeah, for BAT we are quite positive. We think they would have done very well for the year. and just going by the first half performance and just guidance that we've gotten. So we think in general BAT, the numbers are going to come in very well. East African breweries, we think they're still going to deliver very good numbers. But a lot of those numbers could be one-off, especially with regards to the Tanzania unit, where they disposed of some Tanzania breweries. So we expect a one-off gain there. And also possibly from a volume perspective, also Serengeti, because now they have, from a production standpoint, the consolidation. So we expect also East African breweries numbers to come in quite strongly. Barclays, we think, could come in a little bit lower. In the previous year, they sold the custodial business, so that brought in a one-off income. So if you just compare year on year, we expect the earnings for Barclays to disappoint slightly.
Let's also touch on the shilling. We've seen the shilling hit an 11-month high. We've seen the shilling go from strength to strength, partly because we're seeing very tight monetary policy scenario playing out in Kenya. The question is, how much longer is it going to last at these levels? And obviously, it's really benefiting the importers right now.
Yeah, I mean, the shilling has been really surprising if you look at the macro conditions for Kenya. But I think there are several things supporting the shilling at this level. If you look at the inflows into the country, they've been quite good in terms of diaspora remittances and also from exports, the agricultural sector. And also, if you look at FDI, it appears that significantly more companies are looking at the Kenyan market in terms of additional investments. So that's supporting the shilling. The high interest rates as well have also had a very positive impact on the currency. Given that the MPC maintained the high rates, about 18% in the central bank rate, essentially we are seeing the currency finding a lot of support with that level, despite the balance of payment challenges that the country has.